January 11th, 2024 edition of Trading Places Live. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats. Then I'll be your host for the next 30 minutes or so as we prepare for another trading day. We did have the latest inflation numbers come out this morning. The CPI for December hit at 8:30 a.m. this morning. The futures were up a little bit at the time and strengthening. And I'm not going to say a bomb was dropped. That might be a little bit too much drama. But we did see the CPI come in higher than expected. Rather than the 0.2% increase that was expected, we actually saw 0.3. No really big problems, but we've been coming in below for the last few months. And so this is a little bit different, something that the market has to deal with that it hasn't had to deal with for a while. So immediately the futures went negative. Then I saw them kind of fluctuating back and forth. I'm not going to trust the 10 minutes ago. Let's take a look at what is actually taking place right now. We've got the diamonds, which track the Dow Jones, down about 0.15%. The spider tracking the S&P 500 down about 0.2%. The QQQ tracking the NASDAQ 100 down 0.1%. And the IWM tracking the Russell 2000 down 0.75%. And the IWM is gapping down. I believe this is either the 9th time in the last 10 days or maybe 10 days in the last 11. It's been a lot. So if there's been one constant so far to 2004, it's been that the IWM keeps gapping down. Now, the good news is it keeps rallying back, or most of the time it has been rallying back. We'll see if it can do it again today. 192.67 is that big level on the IWM that I'm watching. That's short-term gap support. I think that's the level that the bulls would like to hold, especially with the 20-day moving average just slightly above that. Excuse me. Right now, the IWM is at 193.59. 193.59. So we'll see whether or not that 192.67 level continues to hold. But if we do break down in the short term, that's where I could see the IWM going back into the mid 180s or so. But overall, not horrible. I mean, I think the futures overall could have been a lot worse given, and we do still have another 30 minutes before the opening bell. But given that we finished higher on inflation than normal. And one thing I didn't look at yet, let me take a look at this. Wanted to see the 10-year Treasury yield. Actually, it's only up 4 basis points to 407. I would have thought maybe 420, and maybe we're going there, but 420 would be up closer to that 50-day moving average. So anyway, that's what we're starting off today with. As you can see, I'm in my Carolina Panther garb. I figure it's we're moving in on playoff weekend, and I'm a big football fan. Unfortunately, the Panthers are not anywhere close to being in the playoffs, but not too many folks are supporting them around here these days. So I thought, what the heck? Let's give the Panthers a little bit of love. They didn't have much this year. But let's go ahead and get into the market action. Take a look at what happened yesterday, and then that'll give us a little bit more clue as to what. Actually, I didn't share my screen, so bad on me. Hold on one sec. Okay, there you go. So this is a look at what happened yesterday. For those of you that maybe are joining new, certainly appreciate you coming in. Hopefully you enjoy the way we take a look at the market. And for those of you out there that are our loyal supporters, thank you so much. I mean, that's why we're able to do what we do. But anyway, let's jump into this action. The Dow Jones Industrial Average yesterday up 170 points. S&P 500 up 27. NASDAQ up 114. The mid caps were up almost 7. The Russell 2000, the small cap index, barely up about 0.1%. And we've been seeing a lot of this lately, by the way. Not only has it gapped lower, I mean, it has rallied back. Yesterday was a perfect example, but it definitely has been lagging the other indices here in 2024 so far. And I'm going to keep an eye on that. I expect that to turn around, but, you know, trying to keep an open mind, just watching the action for now. But the Russell 2000 certainly having its problems to start 2024. Transportation stocks had a pretty good day, up 0.6%. So across the board, the major indices that I like to follow all up yesterday. The winner was the NASDAQ 100, which gained almost 0.7%. And transport's not that far behind, up about 0.6%. And a lot of times, as goes the transport, so goes the Russell 2000, but that was not the case yesterday. Communication services, leading sector yesterday, jumping almost 1 full percentage point. Technology up 0.85%, and discretionary up 0.8%. Those three are our most aggressive sectors. And those are the ones I like to see leading the market. So hadn't seen a lot of that. We've been seeing a lot of rotation, but now it's gone back, and at least for a day, we got some pretty good action in the three aggressive groups. So that was good news. Moving on to the industry groups. We've got home improvement. I don't know if you saw, but Home Depot yesterday led the Dow Jones higher. Home Depot closed yesterday at a 52-week high. So it did get a nice breakout. I'll show you that chart a little bit later in the show. But that was part of this home improvement group that had a really good day, rising 2.5% yesterday. Home builders up over 2% yesterday, despite the fact that rates just kind of hovering, over the last couple of weeks anyway, at a recent high, or near a recent high. But still, that's not holding back those home builders. Saw a 2.2% jump there. And I can't tell if we quite broke out. Looks like we certainly are challenging the high level we saw back in the middle part of December, but can't quite tell if we got that breakout yesterday or not. And then finally, medical equipment. Medical equipment quietly has been strengthening, and you can see on the recent pullback to open the year bounced beautifully right off that 20-day moving average. So this is a group that certainly looks a lot healthier today than it did 2.5 months ago. And of course, most areas of the market are doing that, but this was really a kind of a big turn, more of a V bottom where we went straight down and then a beautiful rally back up. And now we're getting back closer to where we were when the downtrend or the correction began back in July of last year. Let's keep moving on and check out the 10-year Treasury yield here. Not sure why this, probably need to change this permanently, but I like the full screen. I'm sure you all probably can see it a little bit better when I'm on full screen. Here you can see the 10-year Treasury yield. Obviously, that downtrend that we talked about with the head and shoulder left shoulder, neckline. There's your head. This was the right side right here of the neckline. And then we went back up, tested the 20-day moving average. That was the right shoulder. And then we've been down ever since. Big breakdown, continued going down. And until these last couple of weeks, we've been right around that 20-day, just slightly above it. Today, I thought with the higher inflation, I was expecting maybe we would see a bigger push up to that 50-day moving average. We'll see whether or not that, if we continue to go up later today or not, as the day goes on. But at least for now, we are hovering just above that 20-day moving average, and it would seem like the next logical step would be to go up to that 420 or maybe in the low 420s and possibly test that 50-day moving average. The S&P 500, you can see big move earlier in the year. Here was the correction I was just talking about, July to the end of October. And then just like turning on a switch, or, that was the seasonality that kicked in right at the end of October. And we've been going up ever since. Yesterday, S&P 500 closed at 4783. The intraday high was 4790, almost 4791. And back at the end of December, the high intraday was 4793. So we were just about, we're trying to break through that level, but the all-time high close is 4796. The all-time high open, I believe, is around 4803. And the intraday high is 4818 and some change. I think 4818.62 maybe. Anyway, nice little cup here. So we do have a move up, nice little cup. One thing that I am issuing and have been issuing a little bit of cautiousness on is this negative divergence potentially. If we do get a breakout to an all-time high, it is going to emerge with a nasty negative divergence in play. I mean, here we are, we're rising, and look at the PPO. PPO is not even budging back to the upside. So if we get through, I don't argue with a with an all-time high, especially if the volume accompanies it. It's hard to argue slowing momentum with a negative divergence if you're breaking out with high volume. So let's sit back and see whether or not we get that. But if we do get the breakout, I also don't ignore a reversing candle that accompanies a negative divergence. So that's what I would be looking for. In other words, I would still be okay on a breakout to be in on your trades, but I might have like 1 foot out the door ready in case we get a reversal, because usually these negative divergences, like I said, that's a pretty nasty one. It's going to take a lot of strength for quite a period of time to get that PPO back up to eliminate the negative divergence. I have a feeling at some point over the next week to 3 weeks, we're probably going to have to endure some selling. Maybe the 50-day. That's usually what I look for when we have a negative divergence. So I'm just preparing you. I think that the odds that we're going to have a little bit more significant selling are increasing with this divergence and the recent move back to the upside. Doesn't mean I'm bearish. Don't get me wrong. I just follow these signals. I mean, if market's going up, that's great. I'm bullish, but I don't ignore these short-term warning signs. So any kind of a breakout, and like I said, breakout plus a reversing candle, I certainly would not be in any leverage. I would take all that off the table. Maybe stick with the ETFs, just to keep your account from losing too much. Individual stocks might get hit harder, especially some of those big NASDAQ names. So just keep it in the back of your mind. It's not, we're not there yet. I mean, we could this could have been a double top. Maybe we go down from here. But I'm thinking at some point, maybe over this next week, we do make this breakout. I mean, maybe it's today. Like I said, the reaction pre-market on the spider right now, it's only down 6/100ths, not less than 0.1% down with that news today. So maybe it ignores it and we go up. But just keep in mind what I'm telling you here about this negative divergence, because if we do break out, it is a short-term warning sign that we should be aware of. The NASDAQ, same thing. I mean, we haven't quite gotten back up to the high at the end of December, and that's where some of that rotation comes in that I've been talking about. Some of the more value-oriented areas of the market are getting a little bit more love to start 2024. Yesterday was kind of back in the 2023 mode where we were seeing a lot more strength in the technology area, communication services, and consumer discretionary. But as I look at this right now, I'm thinking if we get that breakout here on the NASDAQ, breakout on the S&P 500, watch for a reversing candle at some point. I don't know, or just a long tail to the upside where it looks like we're breaking out intraday and then we get a big reversal to the downside. That could be a short-term top. So just issuing just a little bit of a warning here. Nothing huge. It's not, if I was long-term investor, I wouldn't care. I think this is going to pass and it may not even go down. I mean, it's not a guarantee. It's just telling us that the risk is increasing of maybe a little bit steeper pullback in our not so distant future. The IWM small caps, this one has not been bouncing. And this is what I was talking about. Not really a good start to 2024 in the small cap area. Haven't lost any key support. That gap support right there. I mean, I guess you could say the 20-day in the top of gap support. We did go below that. But I usually look at these as like a gap zone, gap support zone, which goes from 192.67 up to about 196. I think it's 196.15. But I'll check that. Yeah, 196.15. And then the gap, and then the 20-day moving average coming in right between them, right around the 195 level, 194.92. So we're just kind of consolidating in a key area of support right now. All right, let's keep going. Transports. Transports actually had a pretty good day yesterday, and I'm going to zero in if I can. Let's go over here and take a look at this. You see the low right here yesterday, right around 15.4. Kept talking about that being support. We got down to 15.410. That was where we had moved up. If you go down and look here, pretty heavy volume starting to pick up right here on this candle. And I think that was the day that we had the November CPI out. We were actually down intraday and then we rallied back. Today's a little different though, because that CPI came in just a tad hotter than expected. So I'm not sure what we're going to see today. We could get a false breakout and then reverse down. I think today is going to be a really interesting day to see whether or not the market can hold up with a little bit higher inflation reading. But anyway, yesterday, notice the transports on this low went down below each of the last 4 days and then finished back on the high. Now, we did that 2 days ago. Look at this candle. We went down, took out the prior lows, and then reversed up, finished on the high. It looked like here we go. And then we were right back down in the channel or in the period or just this consolidation area. But yesterday we did the same thing. Do we get through about 15.6? That looks like probably at about 15.650, 15.660 in that neighborhood. If we can get through there and take out both the recent high and the 20-day moving average and close there, that would be bullish for the transports. Till we get that, though, I think we got to be a little careful. And just in the range. I mean, careful in the sense that it just isn't breaking out. It's not breaking down. It's just kind of meandering back and forth. Let's move on. Earnings beats. Those of you who are new and maybe watching for the first time, I always pull this up every day, every show, because I want to make sure that you're aware we do a free newsletter, completely free, no credit card required. You can unsubscribe at any time. I don't check to see, who's subscribing and who's not. It's completely up to you. I think it's a great free newsletter because I think there's value in every one of them. I write them. I try to put value in there for the community. But check this out, because if you scroll down at Earnings Beats, there's how you sign up. Name, email address, and hit that subscribe button. Again, completely free. You can unsubscribe at any time, no credit card. And it comes out 3 times a week, Monday, Wednesday, Friday. We try to get it out somewhere around the 8:30, 9 o'clock time frame. Try to get it out before the market opens. And it's a very quick read. Generally, it's 2 paragraphs in a chart, but it'll give you a sense of how we approach the market and look at some of the things that we think are important. All right, chart of the day. We got Home Depot. Told you I was going to bring this one up. Let me again make that chart just a little bit bigger for you. But there's the breakout. So Home Depot last 3 or 4 days, really in 2024, starting off the year in really good fashion. Look at the AD line following suit right there at the top, breaking to a new high. Everything here looks good. Volume picked up yesterday. You can see that jump in volume. So really good action. Nice breakout. I like what's going on here with Home Depot. I will say, though, that if you look at a longer term chart, you still got that all-time high from back at the end of 2021, early 2022, which is up near 400. That's, I think, what our next target will be on Home Depot. Here, talking about a lot of negative divergences, not on Home Depot. Home Depot looks really good. That PPO breaking out, coming off that center line test, actually a little bit below the center line. And so momentum is accelerating. That's what that PPO tells us. Short-term moving average is pulling away from the long-term moving average. And that is the sign of bullish momentum and increasing, accelerating bullish momentum. So usually any kind of a pullback to a support area is normally a good buy on a stock that is doing what Home Depot is doing. And if we look back, multiple tops here right around the 330, maybe just over 330 level. We've got the rising 20-week moving average coming in at 322. So I would say from 322, and of course, this number is going to be going up every day. But right now, 322 up to probably about 332. That range, in my opinion, is a great support area. If we do have a sell-off in the market and you see Home Depot get back into that area, I like it there. I like it at that level. I believe we're going to see it back up at 400 to at least test the all-time high. And if we go back a little bit further, what you will see, it'll become a little bit more apparent, is we've had a huge run. Home Depot went up. Of course, we went down with the bear market, cyclical bear markets, just as we did in 2022. But other than that, Home Depot has been a really good performer. So I see this continuing to the upside, ultimately to get up to that 400 level. And when we do, I see a cup. Nice long-term uptrend, beautiful consolidation pattern. I think when we get to 400, that's a logical area where we might see a little bit of selling, a little pullback. But from there, a breakout above the 400 level, if this cup forms and we get the handle, this measurement would be from 400 down to this double bottom at 260. That's 140 points. Tack that on to 400, and that gives you a measurement to 540 on Home Depot. So it's sitting at 356. 540 is almost a couple hundred points above it. But again, that's assuming the pattern plays out. Now, if we just go back up, break out, and there's no handle or whatever, I mean, you could still use this, as a guide. But the reason I like the patterns is it does give us targets. And without the patterns, I'm not sure that the odds are that it will follow as much as if there was the pattern. So anyway, just throwing that out there. But Home Depot, I think, looks good either way. And maybe it comes back down and breaks down below this 320 level. And in that case, I'd probably be out of it. But right now, Home Depot looks really good. Got a couple earnings reports coming up tomorrow, and I added up the market value or the market cap of these handful of companies, and it's somewhere around $2 trillion of market cap where the companies are going to be reporting earnings tomorrow. So I'm going to go through them real quick. And first, we'll start off with JP Morgan. JP Morgan, you can see that AD line looks like accumulation to me. Been a great run. The relative strength on it has come down a little bit, but that's after a really good run into the fourth quarter. I believe we're probably going to see a move higher still on JP Morgan when they come out with earnings, but we'll see. Maybe it's a buy on rumor, sell on news. Maybe all the good news is already priced in. But there is a lot of accumulation that's been coming in. Any kind of a short-term pullback, I think, would be just that. I do like JP Morgan in 2024. Next up, we got UNH. Hold on one sec. So UNH looks to me like it's making a run for this 550, 555 area to test the highs that it saw in December. Again, look at the AD line. It's been strengthening. This is another one that looks like it's certainly ready for the breakout. And this right off the 20-day moving average here, actually, I think is pretty good entry for UNH if you're okay holding into earnings. And that's a big if, because this is a stock that can move with its earnings. Maybe we get that big breakout. That would be my guess. But again, that's up above the 550, 555 area. So right now we're at 537. So we still got about 3% or so to get up and test this area. And then we'll see what happens with earnings. Next up, Bank of America. You'll notice a lot of these are banks, by the way. Banks usually get the whole thing started. And because regulators, they are basically, banks, the reason they report so early is that they are generally ready for the regulators very, very soon after quarters end. So most of the time you're going to see banks report in the first 15 to 30 days after the end of a quarter. So we got a lot of banks coming up with their earnings over the next couple of weeks. But Bank of America, again, look at the AD line. I'm seeing a lot of accumulation. This is another one that's made a big move to the upside. The relative strength bottomed at the beginning of the quarter. We've been seeing some relative strength over the last 3 months. And look at the bank index, by the way, relative to the S&P 500. We are approaching a 52-week high. And we will probably, actually, we may be at it. We may have hit it here because that was on January 5th. And probably by January 5th, yeah, it looks like we hit that 52-week high there. So this is a good area of the market right now. It's been strengthening. We know all about November and December being strong months for banks. I think this could continue, but let's watch this. Does this go back up and set a new relative high? That'll be one thing I'm watching over the next couple of weeks as these earnings keep coming out in the banking area. And then we have Wells Fargo reporting tomorrow. Big move up, nice little bull flag. Here's your flagpole. Here's your flag. You got great support, gap support anyway, down from about 47.75 up to maybe about 48.50. Then you got the 20-day moving average at 48.62. So you got a lot of support right in here. And again, earnings coming out, I would expect AD line strong, relative strength on Wells Fargo, been hanging near its high all year long. So Wells Fargo still looks pretty good to me. It has pulled back recently, but that's because of the consolidation. During its strength, before it started to consolidate, Wells Fargo actually looked really good, up at a 52-week high on a relative basis. So again, dropping with the sideways consolidation, but I expected a good report out of Wells Fargo as well. Let's keep going. BlackRock, BLK, another one, big move. Look at the AD line. We've pulled back 20-day moving average. This would seem to be a pretty good area for a bounce in BlackRock. And if we look at a relative strength chart, relative to asset managers, 52-week high in November. And then, well, recently, as we made this last high, we have seen a little bit of a pullback. I still would expect a good report out of BlackRock. Citigroup reports tomorrow. Look at the action here. AD line not as strong, but it has been strengthening over the past 2.5 months, going up along with price action. And here's your relative strength. Citigroup has been moving up off of that low in September. So as we've seen, like JP Morgan move down a little bit, we're seeing money rotating into some of the other big banks. And Citigroup is one of them. As you can see, that relative strength picking up over the last 4 months. I think this might, well, maybe a couple more here. Bank of New York Mellon, AD line strong, price action strong. This looks like maybe slowing momentum. Let me just try. Well, actually, that's going to mess my charts up. Never mind. You could look at the PPO, but the way this is going up so strong, and then this is like a little bit more effort trying to go higher, my guess is that PPO is rolled over. We probably have a negative divergence there. Maybe I'll come back and look at this one in just a second. Next up, Wipro, WIT. Now we're getting into smaller companies, but these are still multi-billion-dollar companies. Wipro reports tomorrow. Here's the move up. AD line not as strong as some of the others. It has been going up, but it seems like it's a little bit been a little bit of a struggle. Pull back near the 20-day moving average though, and you've got price support coming in at $5.30, right where that 20-day moving average is. So that would be a key support area. And from there back up to 560 would be 25 cents, which would be about a 7 or 8% move. No. 25, it'd be like a 5% move, my bad. That would be like a 5% move to get back up near that 560 level. Off the 20-day, I certainly could see that. Relative strength, though, this one recently had gone through a lot of relative weakness. We're getting a little bit of a bounce. I don't know, without a real strong AD line and now looking at that relative strength, which was really poor going into the last few weeks, I think this could be a case of a rising tide lifting all boats, with the market just kind of dragging a lot of things higher. This one actually worries me a little bit. And it is in the computer services area. I don't know. There's some other stocks out there definitely that I just showed you look a little bit better than this one. So maybe scrap that 20-day test, because I'm not really seeing a lot of other corroborating signs that would tell me to jump all in there. And Delta Airlines reports tomorrow. We're going to get our first look at the airlines as well. Tomorrow's going to be a big day with earnings. And you can see the move up, move back down. Now we're coming back up, maybe a little bit of a cup. We're not quite up there. AD line kind of looking like Wipro, just a little bit move to the upside. Relative strength, though, you're still looking at one of the best airline charts out there. So if you're hoping the airlines are going to do well, this is going to be kind of a big deal. Let's see what Delta does. But if they miss, that would be a problem for the whole group, in my opinion. If they beat and they break out, that would be a great start to earnings season for the airlines. All right, it is 9:29. I did pull up the NASDAQ here just to show you, because the NASDAQ did show some leadership yesterday. I was just going to pull up and show you some of the names that were leading. Intuitive Surgical, I believe, was the top performing S&P 500 name yesterday. Palo Alto, Meta, both of those names are in our portfolios, so I like to see that. Palo Alto up 5%, Meta up 3%, another $13. Meta's been on a roll, by the way, and we'll finish with this one. Meta you can see making yet another breakout yesterday. I think this bodes well. First of all, internet loves the month of January, internet stocks. And Meta, if we pull up, look at the AD line down here. AD line very strong. Check out the relative strength here. Here is Meta relative to the internet group at a 52-week high. So this is one of your leaders in the internet space. So again, if you like internet stocks, you got one reporting tomorrow, or I guess they report in 2 weeks. I'm trying to think what their date is. I can tell you 1 second. If you ever want to, you can get the earnings date, I think, by the full quote, or if you just put in the symbol summary and we go to Meta, it'll tell us right here. So 2/1. Actually, I thought this was a I think it's Google. I think Google is like January 23rd. No, there was one of them I looked at. Netflix, maybe. Yeah, January 23rd. There's Netflix. So Netflix will give us a little bit of a clue, but let's see what happens with Meta. That breakout, I think Meta looks good just about everywhere. I think they're going to have a blowout number. That is in February, so we do have to wait about 3 weeks for that one. Anyway, that's it. Let's take a quick look. Market just opened, and we're up, except on the small caps. Small caps lagging again. This is starting to be like Groundhog Day. This is like 3 days in a row where it seems like the other rest of the market doing much better. And most of the weakness on the IWM continues to come in at the opening bell. So I don't know if we're going to do another rally off of it like we've been seeing. I don't know. Off of that early gap. VIX down another. I mean, we just had the CPI come in higher than expected, and the VIX goes down again, and the market goes up. S&P 500, 47.95.89. All-time high close, 47.96. Hold on. Anyway, 47.96. Well, we just dropped back down 3 points there. So we got right up to that all-time high close. It'll be interesting to see if we go through it today with bad economic news. Actually, I didn't even look at the initial jobless claims. I was so interested in the inflation report. Let me give you the jobless claims before we end this. They were better than expected, 202,000 versus 209,000 expected. So pretty good initial jobless claims number. Labor market still seems kind of strong. I know there's some that are thinking we're going to have a recession in 2024, maybe a big one. I'm not seeing it. I mean, let's see what happens. But I think the Fed, this could actually turn into like a Goldilocks kind of a situation. My only problem with it is that I think a lot of it's priced in, or at least a good portion of it. We've had such a big run over the last couple months. And that's one of the reasons why I think we see more chop in 2024, at least in the first quarter, is because I think that we still have to digest those gains. Maybe earnings will come in really strong, and now you can see things are starting to turn back around. We've already lost like 9 points on the S&P just since I was talking, so that may have been it, hitting that double top. We'll see. Still a lot of action to go today. Shouldn't say that. But just keep in mind that there are some warning signs out there in the short term. So if we do get that breakout, remember, watch for a reversing candle above the breakout level, because that could be a really tough signal for the bulls maybe over the next few weeks. Anyway, everybody have a great day. I'll be back on Tuesday for your next show. Enjoy the weekend. Enjoy the football. Should be great. And if you don't mind, hit that like button and subscribe to the channel. Thank you so much for your support. See you on Tuesday. Have a great weekend. Happy trading.